Good afternoon, ladies and gentlemen. Welcome back. I hope you've had time to have a break, and I hope you've managed also to get to our exhibition hall, perhaps visit some of the booths and download some of the resources there. Remember also to quiz the speakers on chat. I think you can quiz me as we speak, so please feel free to do that. I'm going to talk now for a little while and give you a break from PowerPoints and super technical material. There's lots of good technical stuff coming, and you've got lots of good stuff from our practitioner speakers coming as well. Now, as many of you will know, I've been part of the editorial and event teams at AKJ for some years now, but of course, we're neither practitioners on the buy side, so we don't try and keep things cyber secure all day like you guys do, but we're not super technical experts, subject matter experts like the vendors either. So where I tend to look is to descend from my podium to give you an occasional, what I consider hopefully to be an educated outsider's view on the bigger picture changes, which I think are going to affect your industry, your jobs, your organizations. There is an issue, I think, with the level of mandatory and officially enforced actions that we're going to see in this area. So yes, banks spend huge amounts of money on cybersecurity. It's certainly not a neglected area in that sense. The banks are repeatedly shown to be the most highly resourced entities in that sense. However, there is a lack of direct cybersecurity regulation, and that affects how it's managed and perceived within organizations. So banking is a hugely regulated industry. Just complying with global regulatory framework covering wholesale and retail commercial investment banking is a complete nightmare. It's very, very expensive. It's generated entire industries of specialists and third-party managed services and reg tech and so on. And that regulatory focus explains why banks themselves focus on fraud, on KYC, on AML, on financial crime, on sanctions, and on data privacy. And to me, it explains also why those activities are often siloed from each other and from cybersecurity, despite the interrelationships between them and despite their reliance on digitalization and their reliance, therefore, on a secure digital infrastructure. All of those activities exist in their current form within banks, largely as a result of regulation. Sure, they are important for business reasons, but it's inconceivable that they would consume the resources that they do now and be organized the way that they are now in the absence of the regulatory framework that defines them. I've always been interested that financial services cybersecurity isn't really regulated. It certainly isn't regulated with the granularity that all those other areas of the bank are. And actually, if you start poking around, it's quite difficult to find any true cybersecurity regulation. Now, I'm sure there's people out there, you're going to say, no, there's a ton of cyber regulation out there. But is there? So you can't have GDPR, it's not a security regulation, it's a privacy regulation. PCI DSS, well, that's just not even a regulation, that's an industry compliance framework, it's not mandatory. What about the EU and its Cybersecurity Act, the one that became effective on June the 27th, 2019? Well, that is about ENISA and voluntary certification and standards. And yeah, sure, in future, businesses will be able to certify their products meet EU cybersecurity standards on a voluntary basis. And it may be that in time, the certification there may become mandatory, but it's not now. Yeah, you've got the FCA and the PRA, and they have principles of business. And in those principles of business, there's all sorts of vague paragraphs about systems and the things that banks have got to provide, which, if you dug down and down and down and down, would imply that they had cybersecurity. But there's nothing about cybersecurity, particularly in those principles of business. And it's a real stretch to say that they are anything to do with cybersecurity regulation. Yeah, you've got the Senior Management Arrangement Systems and Control Sourcebook. Again, it's very broad, really, really broad. And if you go through all 100 pages of the World Bank's 2019 Financial Sector Cybersecurity, a Regulatory Digest, which I don't suggest you do, unless you're particularly interested in cybersecurity in Ghana, you will find the overwhelming majority of it is about frameworks and assessments and voluntary codes. There's very little anywhere that's been done that is true regulation that directly relates to cybersecurity. And that is why it's organized the way that it is in banks. It's why the other regulated functions are siloed, but it's also why cybersecurity does not have the profile of some other functions in terms of organizational profile. I'm going to put it like that. So way back in July 2018, the Bank of England published a discussion paper, number 1/18, and it's called Building the UK Financial Sector's Operational Resilience. Then, a little bit later, at the start of 2019, the UK Prudential Regulatory Authority came out with its operational continuity requirements, the OCIR, and that came into effect. And in the supervisory statement that set out the rules relating to operational continuity, the PRA described their purpose as follows: for firms to ensure operational continuity of critical services to facilitate recovery action, orderly resolution, and post-resolution restructuring. Critical services are those services that need to be available to one or more business units of a firm or entity of the group in order to provide functions critical to the economy. So we're starting to come down from those very, very, very general statements about systems and processes in previous regulatory or pseudo-regulatory documents. We're starting to focus on the idea of regulation of processes, and those processes being technology dependent. Come December the 5th, 2019, the UK authorities published 4 operational resilience consultation papers, and by authorities I mean the Bank of England, the PRA, the FCA. The proposals further develop many of the concepts which were originally put forward in that 2018 paper, and they represent a clear statement of intent by the PRA, the Bank of England, and the FCA as to what's expected of firms going forward in terms of resilience. And we'll come on to resilience because it's sort of the key to this. These papers detail how the authorities intend to look at how banks ensure the resilience of key business services, how they set impact tolerances for each important business service, and how they measure, that first point where a disruption poses an intolerable risk of harm to consumers or market participants, and what they do at that point. So that's a resilience focus, and they make it clear that firms must take clearly evidenced action, so record it, to address identified threats to operational resilience. The PRA and the FCA's consultations, to me, are the first time regulators are trying to detail clear expectations about the standards that they require of firms in operational resilience and how firms can meet the standards. And we're not there yet, but we're getting there. This is a quote from a Big Four consultancy firm on the significance of the papers, which I hope bears out my emphasis on it. Banks, building societies, PRA-designated investment firms, Solvency II firms, so insurance companies, recognized investment exchanges, enhanced scope, senior managers and certification regime firms, entities authorized or registered under the Payment Services Regulation, electronic money regulations are all in scope of what is a determined effort by the UK's regulatory authorities to put operational resilience considerations at the forefront of firms' investments decisions. Now, obviously, going back to all of those vague statements in the past, the principles underpinning these changes are not new. Firms have theoretically been subject to operational resilience requirements via all sorts of legislation and rules and practical supervisory expectations. But they do represent the first concerted attempt by regulators and policymakers to address operational resilience holistically. And I think that's what's changing. And it's important to cybersecurity. What have they done? So they've basically focused in on this idea of operational resilience. And they specifically say that business or operational resilience is not the same as the general risk management processes that banks have. It's not operational risk management. It's not financial risk management. It's different to disaster recovery. It's different to business continuity planning. That means, fairly obviously, that they're concerned that those risk management processes are not identifying or considering organizational readiness to deal with impactful events. And in part, this is because disaster recovery or business continuity, crisis management, resilience are not always closely integrated with the risk management process or function. So the big question that you're all asking yourselves, having listened to all of this, is why on earth should you, as cybersecurity professionals, care about any of this stuff at all? You know, the Bank of England has run cybersecurity war games, and you've probably been involved in those. Yeah, we all know the Bank of England have known cybersecurity as a risk. The FCA occasionally mentions cybersecurity in its papers. So again, you've interacted with those regulators. You know that they know that this is an issue. And cybersecurity does crop up from time to time in discussions of where it should sit in the 3 lines of defense model. But the reason that cybersecurity professionals, I think, are going to get much more acquainted with these papers and why the COVID-19 crisis is important in changing over time how all of this works is that these papers on business resilience that have been put out, spend a lot of their time talking about technology. In fact, really, if you're brutally honest, they almost only talk about technology. And so they do also mention cybersecurity, and they recognize that the two things are intrinsically linked. There are even additional papers they've written which are devoted to outsourcing to the cloud and the issues of that. So it's very, very systems oriented. So what does that mean? Well, it means that slowly but surely the regulators are figuring out that technology is an absolutely fundamental risk factor in financial markets. It's one thing to say that they know banks are tech companies, but once they've realized that, the key realization is, oh, if banks are tech companies, then cybersecurity is a massively elevated issue in the resilience of the sector. So if they, as regulators, are there to ensure the smooth and continued function of financial markets, then they have to get more involved in regulating that technology in the same way that they've pursued other non-technical risks, non-technology risks earlier. So I think what these papers show is between, over that 2-year period, just the Bank of England, the PRA, the FCA, just talking about the UK, they're moving from scattered and very generalized statements about service delivery and systems appropriateness to much more detailed approach in which they're going to start to get mandatory at a much more granular level. In other words, the whole focus on resilience is critical because it's bringing the whole of bank technology under the regulatory microscope. And the difference with risk management and financial risk management is that here the plumbing is important. Even if one accepts, I know that some of you wouldn't accept this, but even if you accept that cybersecurity is part of the plumbing, operational resilience absolutely depends on the plumbing. And so you can't escape cybersecurity technology if you're going to talk about operational resilience. And I think that's interesting. Yeah, DR, disaster recovery and BCP, sure, they're concerned with the plumbing, but in a different way. The regulators didn't pay them too much attention. But I think cybersecurity is different because resilience is the function that the regulators have decided supersedes business continuity planning and disaster recovery. They don't think that those functions cope with the kind of big picture impacts we're talking about. And there, cybersecurity is a fundamental service which emerges pretty naturally as a key contributor to that resilience. So I think cybersecurity gets on the radar much more directly. Now, you probably know already that banks are staffing up new resilience functions. And some of you in cybersecurity will have interacted with those functions. And you will be on committees where cybersecurity and resilience discuss some of these impact tolerances. Bear in mind, everything I've just talked about happened before COVID. These Bank of England papers, they've been building up to this. They've understood that resilience is an issue before COVID. They've understood that cybersecurity and technology are the keys to that resilience, and they've wanted to regulate resilience. They've thrown up a flag to say, we're going to regulate resilience more. So COVID has now obviously just massively raised the stakes. It's confirmed they were right. DR and BC plans did not kind of take this kind of scenario into account. That is taking nothing away from the banks. The banks have weathered this storm very well. But the fact is, and they have proved, therefore, to an extent, their resilience, although the market volatility and there was some lack of resilience in the first weeks of this crisis. But what we've got is a situation where the regulators want to look at continuity in terms of individual processes, even perhaps down to think, which payments does Bank X have to make today to ensure it remains operating? So that's where I think we're going. Mandatory regulation for resilience means mandatory regulation for cybersecurity. Now, it should therefore be obvious why I think that's important. So we have an industry in which the resources allocated to particular functions, the efforts, the staffing are driven by regulation. So it stands to reason that if cybersecurity becomes part of a regulatory push by key regulators in developed markets, then you're going to see more visibility, more budget, and more mandatory oversight of your functions. Now, it may just be a long overdue recognition that technology and cybersecurity should not simply be viewed as beneath the regulatory remit. There's so much plumbing that the regulators should think above that. But I think that's the past. I think the regulators understand now that resilience is a more important quality than some of the other things they've been looking at. And in particular, they've understood better than before the extent to which external events can have knock-on effects in technology, and then cybersecurity becomes extraordinarily important in maintaining systemic integrity. And I think that's important. So if I was in cybersecurity, I'd be swatting up on resilience. I'd be getting cozy with the resilience teams at my institution. If there isn't a resilience function at your bank, I would be waving the papers around saying, why haven't we got a resilience function, and why aren't I on the committee? And I'd make sure I was a key contributor to those conversations, because where the regulators make rules, cynically, there is money, there is status, there is power. So that's my thought for the day. That was a 20-minute speech on the fact that I think cybersecurity is going to become a key part of a drive for mandatory resilience regulation, and you are finally going to get the regulatory oversight that you deserve, whatever you want to take away from that. So I'm now going to hand you over to Max Fawn of Okta, and he is going to talk to you today about using IDAM to protect against modern day bank jobs. So thank you very much.